Around $80 a barrel. Oil still trading in a range that OPEC likes, but will a weak dollar and painfully slow recovery jeopardize the organization's ideal price? Steve is in Vienna for us, watching this OPEC session. Steve, let's come out to you.
Jeff, there is a mystery out there, and that mystery is, why is oil still trading at 83.92? You and I had a very interesting conversation in the first hour of Squawk Box about the lack of US demand, about concerns about a double dip, and why oil is still at this level. There's an awful lot of oil out there. OPEC believes it's got 1 trillion barrels of oil out there. So why are we still seeing these exacerbated levels to the upside in a price of oil? It's currently trading on West Texas at 83.92. Well, let's ask one man who I've spoken to many times over the years who believes that oil is going north, and going north in some fashion as well. Thomas Bachheimer is the CEO of Meridian Commodity Advisors. Thomas, you are a permabull when it comes to oil as well, but there are an awful lot of suppliers out there. The Iraqis and the Iranians jumping over each other to say, actually, we've got 143, we've got 150 billion barrels of oil in the ground. There's a lot out there. So why is the price going up?
This is mainly due to the money supply. We produced a tremendous amount of US dollars, and oil is quoted in US dollars. Of course, the intrinsic worth of $1 compared to commodities is shrinking, and that's the reason why the oil price has to come up, and it's lacking a little bit, and I think there's much more to come in the next couple of years.
So you've gone straight to the heart of the issue. You just think that the US dollar, which has not only gone down, as you said it would, to your credit over the last couple of years, but you think it's going down even further, and as such, your price in dollar terms will continue to go up.
Absolutely, I'm sorry. Absolutely, I think in dollar and euro terms it will go up. In strong Asian currencies, maybe it will stay stable. So the Asians will have a more stable oil market in near future, and we will have higher volatility and higher spikes up for sure.
So actually, what we really need to look at is the price of oil, not in dollars necessarily, but in another currency, perhaps even another commodity. You like this relationship between oil and the price of gold, don't you? And you think that there's a disparity there in how that relationship is trading?
Yes, we have been talking for 6 years now together about the oil market, and in this time span I was always watching the gold-oil relationship, because I am disrespecting the US dollar. So, and most of the time I could buy 1 ounce of gold, I could buy between 11 and 16 barrels of oil. Only in year 2008 I had 2 extremes. When the price was 140, I only could buy 6. Mm-hmm. And in fall, I could buy almost 20 barrels of oil. So in June 2008, I was mistaking the market, because I thought the gold market has to explode because the oil market was that high. But it was extreme, the opposite. The oil market imploded. But the relationship should stay between 11 and 15, 16. We are now at 16.5, I guess, yesterday evening. And so if the market comes to 100, the oil market, it wouldn't be harmful at all.
Now look, let's get to nitty-gritty. I said you're a permabull when it comes to oil. Where is the oil price going, in dollar terms, if you can?
In dollar terms, I would suggest it has to go to 100, because I charge it in the oil terms.
And thereafter,
if the monetary velocity kicks in, we built this huge amounts of money, but there's no velocity. But if this gets into the real economy, then mass times velocity square, we have inflation, and gold is indicating.
Getting all mathematical economy as well, Thomas. We get your passion. You think basically oil is going north from here, and we shouldn't be priced in dollar terms necessarily anymore. Yes. Thomas, it's very nice to see you today. Thank you very much for joining us. Thomas Bachheimer, the CEO of Meridian Commodity Advisors. I'll apologise very briefly for Thomas's passion in one of his answers there. I think your viewers might have heard a little bit too much passion, but Jeff, I'll hand it back to you.
I thought it was a sneeze in the middle of his answer, to be honest with you, so I just missed it. But thank you, Steve, for that. The dollar at a 10-month low against a basket of currencies as speculation mounts over further monetary easing from the Federal Reserve. The weaker dollar forcing countries that peg to the greenback to respond. Singapore's central bank has widened the trading band to dampen the risk of inflation by letting the Sing dollar appreciate. The US dollar hitting a 15-year low against the yen, while the Aussie dollar hovering near this parity number. Now, we thought we'd taken this out and we'd gone through it. A lot of you don't think we did, but hey,